Hello and welcome. Today is Saturday. It is the 26th day of April 2014. My name is Derek and welcome to today's silver video, which will start off with a $19 US price timeline. And the timeline brings us back, well, I guess 1913. That was when the Federal Reserve started its reign. Heck, we can go back any time below this or before this. Maybe even 3000 BC when silver was first used within monetary trade. In the 19th century, the price of silver was $1.29 per ounce. But up until November 30th, 1979, silver never once closed above 19. On the 30th, it was exactly 19, which was an all-time high. The day before was also an all-time high, closing a bit below 19. Now, from November 30th, 79 to March 26, 1980, there was only one day where the price closed within the LBMA levels at that mark. That's all of December, all of January, all of February, and most of March. So about 4 months where price action was relatively high. Then from March 27th, 1980, to October 23rd of that year, so all of April, May, June, July, August, September, and most of October, every day was below 19. And well, for a month, October 24th and November 24th of that year, 7 of the 24 trading days did close above 19, and well, 17 closed below it. From November 25th, 1980 to February 27th, 2008, every single day closed below 19. That is over 1/4 of a century. Long time, basically. Then on February 28th of 08 to March 18th, for about 2.5 weeks, price action never fell below 19. Not for one day, not for 1 hour, not even for a second. The entire duration of time, price action was always above $19 per ounce. And things changed the next day on the 19th. For from that point on and the rest of 2008, all of 2009, and well, the first 2/3 of 2010, only 2 days held above 19, which meant that the lowest price was 19. If you've ever heard JSNP4 mentioning a day where the price went down and down and down and there was just no buyers, well, that date was March 19th of this year. Very volatile moving price fluctuations during its entire run, at least since 1968. Then on September 1st, 2010, all the way up to July 4th, 2013, which was all of 2011, all of 2012, and, well, we'll say 2 3/4 of a year, price action again never went below 19. Every second within this time, at or above $19 per ounce. On the 5th of July, 2013 to current, there has been 10 days that have fallen below 19. And each of those days has been above 19, which means if you look at the 10 days where price action was 18 something, the high for the day was greater than 19. And last Thursday, we had a day where the price dipped below 19, which was the 10th time this has occurred. Let's take a look at one chart for today. The chart we're going to look at is the 9-day chart, with each one of these periods, with the exception of the last, representing 9 days. This is only the second day of this chart on this last day. Anyway, we're going back to late 2010, which obviously had its up move to the $50 level. The large red candle occurred in a matter of an hour or so. It's very volatile when they want it to be such. Price action dropping from 50 down to, well, at the time it was, I think, around 40. And then the next day it would go down to 32. But at the time it would meet up within this 18 average band, a correctionary part. and it stayed within the uptrend. Obviously, the big date, I think it was September 30th, 2011, huge crash going from 40 down to 26, thus making a lower high here and a lower low, starting a potential and was that of a downtrend. Now within it, of course, you see this in the down movement. To get above it or to change direction, you need to break above it. There we have it. Come back to support, which is the band, and then break resistance. That didn't even come close to the next stage of doing that, of breaking resistance. And breaking down below this support level was a very large move, going from about 30 to 18 and change. Now, since that point, and this has taken us back now to the fall or late August, actually, late August of last year, when it came up towards this band, it has stayed within it its entire duration in a bias of downwards movement, but in the correctionary phase that has not broken either out to the upside or broken down this key level of support. Now, it's a manipulated market. It's been manipulated its entire duration of trade, which we'll say back to 1968. And there is no signs at this point for the manipulation to slow down anytime soon. The information for how our currencies are created and the fraudulent manners have been available now for close to a decade very easily on the internet. But does it really matter? If you talk to most people in this world, they don't even know what a fiat currency means, or that the problems that is mathematically guaranteed within it. So how this thing is going to break out? Does it break down well below that 19 level, stay there for a while, or go down large? Well, obviously within the manipulation, it's possible. Key thing is it's really got to break down well below 18, and then you're going to say, okay, this thing could fall pretty hard, because when it breaks key support, that is when you can have these fast moves like you see here. And you've seen back that point there, not uncommon. Now, not always, of course, will that be the case. For you broke down fast below here, never went below it. Same thing in here, never went below the 26, but this time it did. It was breaking down here, but it never went below the key level. But just something to be interesting of note. Now, of course, on a bullish level, just like in here, this band has got to flatten out, and it hasn't done so. It's been correcting within it for 21 periods now, but has not flattened out yet. Once it flattens out, it's got to get above it, like you see here, come back, find support, break resistance. That's the key thing. When you see that, then on the long-term time frame, you can start to say, okay, now it looks like we might be entering a multi-year bull market again. It's obviously now been a multi-year bear market when we go back to 2011 well, it's the end of April. This means that we are now on the 3-year anniversary of this top, thus a 3-year bear market so far in place. The bands, which is a key level, notice in here that it did touch the lower band. The lower band right now is 1640, so there is a lot of downside room that could come into play. A big crash, that's one of the next targets, is the 16 level. On the upside, the upper band is 25 right now. So there's a lot of room for this to, for me to say, okay, it's got to go up a lot at this stage, for you can start to not only consider that the bear market or neutral market is over, but a bull market is beginning. This running purple line here, that's the running average from this high. When this thing can start to flatten out and go higher, there's another sign that the bull market is beginning. But this is over, this is like 28 and change, close to 29, an ounce. That's another 50% gain. That's a long ways to go for it to even do it. So there's a long ways for this thing to break through. Little pattern we can see here is a descending triangle, which is a bearish pattern. And if it does break down below this, again, fast move would most likely be the case down towards, again, the 15 level. What would happen there? Tough to say. Will it stay there for months or years? Well, it has stayed below here for months and years, so maybe. And that could also be an area where when the bottom occurs, it has the fast move, sort of like was the case in 08 when it reached $8.50 per ounce. So thank you for tuning in to today's and this weekend's video. Take care. Bye-bye.